let's kick this off. Jump right into it. What's up, everybody? So I'm gonna give you guys a brief technical overview on Bitcoin transactions. I guess if you were in that last one, this one is a way more high level. So if you're very confused by that, this will maybe come at the other from the other end. So yeah, anatomy of a Bitcoin transaction. You know, the idea we'll break it down into smaller pieces to try and reason about it in case Bitcoin transactions are mysterious to you for whatever reason. So yeah, my name's Oscar. I'm a software solutions engineer. I like building things that integrate with Bitcoin. I'm working full time at the engineering team at Fedi. So yeah, only got 20 minutes. So the goal here is let's see if we can learn some of the technical basics of a Bitcoin transaction. And yeah, so first thing I want to do is just get a little bit of a comprehension check. It helps to understand how much people understand already. So what we'll do is just like by way of like some snapping or tapping on your chair, I'm going to read down each of these things, and you tell me if you have a good idea of what each of these things are when I say them. Just, you know, tap, make a little bit of noise. If maybe you've seen these words, but you just have no idea what they mean, you would need to know more about them. Don't say anything. So that way I can get a sense of where we're at. So Bitcoin node, do we know what that is? All right. The mempool, okay, transaction inputs and outputs. Okay, UTXO, public and private keys, seed phrase, multisig, double spending, okay, lightning channels, locking scripts and unlocking scripts. All right. Bitcoin opcodes. Segregated witness. Segwit. Okay. Taproot. And inscriptions. Heard that, but we don't know. Okay. All right. So maybe like half the room has a good understanding of the left side there, but I did hear quite a bit of quiet. So yeah, that helps. Thank you. So moving on. Just right, I'm sure I heard a lot of noise for Bitcoin node, but just the gist here is if you have a hard drive, internet connection, you can run your own bank, right? You have a full node, you're downloading all the transactions since the beginning of the Bitcoin blockchain, since Genesis around 2009. Everyone's checking each other's ledgers to make sure no one's trying to break the rules, break consensus rules. For example, spending coins that you don't have, double spending coins. All the Bitcoin nodes in the network are making sure that no one's doing any of that. Once you send the money, there are no refunds right after they pass the mempool, which we'll cover that in just a sec. So yeah, you're just as a node, you're relaying transactions and blocks to the rest of the network only if they follow the rules. The mempool is where a Bitcoin's transactions journey begins. You can think of it as a waiting room. There's that AI generated little analogy there, graphic. So the memory pool, the mempool, is all the unconfirmed transactions. The higher the fee, the higher the priority. They'll lead to faster confirmation. And you might have seen, when the network's congested, the mempool size grows and the lower fee transactions get evicted. So yeah, just basics here. We know what nodes are. We know what the mempool is. And so transactions, kind of just like a 101, I want you to think of them in three phases. The construction of a transaction, that's what the sender does. They, make sure that everything is defined, where the money's going, where it's coming from. The recipient is going to validate that transaction, make sure that it's legit, that the money's actually there, and that it's going to the right place. And then the confirmation, that's up to the rest of the network to confirm. That means the miners and the consensus. That's a whole rabbit hole there. But just generally, there's a transaction can live in kind of three states here, or three processes. So every single transaction has inputs and outputs. Now, what are these things? Inputs represent the source of the funds, roughly, and outputs represent the destination, again, roughly. We're going to dive a little deeper. But the key thing here that I want to share is that confirmation step is when the output can be used as an input in a later construction. So I don't want you to think too much as like, okay, input comes first, then the output comes first. There is like a bi-directional relationship. It's almost cyclical, where you have an input going to an output, then now that output can become an input in another transaction, and then round and round we go. So that's what I'm trying to convey here. So it's not just black and white. Okay, I'm done. So a little deeper here. So the thing about an input, as I mentioned, it's a reference to a previously confirmed output, and it must be confirmed, right? So you don't want to be trying to spend money that hasn't been confirmed because, just in case there's some kind of reorg, you want to be sure that that's you can spend those funds. And so the two terms here that I want to draw attention to are the unlocking script and the locking script. So the unlocking script contains the proof that satisfies the locking script in that previously confirmed output. So the inputs contain the unlock, the outputs contain the lock. And so again, this is why you might get your wires crossed if you think of inputs coming first, because they're referencing a previously locked script in an output, right? So this diagram here should help visualize this. And so yeah, that locking script can contain any number of spending conditions. The simplest is, do you own the private key to this public key in the script? So here you can see where, just kind of start to finish. On the left here, we have the inputs. They create an output with a certain amount. Then that output, after it's been confirmed, can be used as an input, the green there and the red there. And then creating transaction C, we now have two more outputs, which again can then be used as an input to a further transaction. So that's mechanically, what we're talking about when we say inputs and outputs. And you'll notice there that the amount is on the output, is defined on the output. You don't actually say I want to spend, on the input side. You don't put the amount in there because it's just a reference to an output that already has the amount. And so we'll see how that ends up creating what we know as the fee, because the fee is not actually defined anywhere on the transaction. It's sort of implicit. And I'll show you an example of that in just a sec. So yeah, questions so far, is this pretty clear? No confusion. Okay. So again, there's a part of the transaction that they're not considered parts of the input or the output, but they're still important there, and that's called the transaction header. There's three main things you'll find in the header. The transaction version, not too important. That's just kind of there in case we need to use it for upgrades. I'm pretty sure we only have two versions, maybe three is still kind of the code for a version 3 transaction still being worked on. But yeah, that's just a little bit in there. That's neither the input nor the output. Time lock restrictions, the end sequence to the end lock time. I'll clarify here. These are part of the transaction header. However, there are ways to restrict, basically put a time lock restriction on individual outputs. So what you'll find in the header is the restriction on the entire transaction, but you can do certain things with the scripting within an output, within that locking script of the output, that also is respected by the network. So yeah, that's a bit of another rabbit hole there, but there are two different ways to add time lock restrictions to a transaction. What we're looking at here in the header is specifically the entire transaction. All of the inputs and outputs inside the transaction are restricted by this. And the other thing in the header is the number of inputs and outputs that you can expect to find in the transaction. So yeah, so those are like just the little bits and pieces of the transaction header. Yeah, go ahead.
You go back a second. So end lock time on lock or transaction.
The transaction.
How coins get locked up when it's mined and you can't spend it for the next 100 blocks? Is that where that is?
Good question. I actually think that rule in particular is just kind of part of consensus. It's a good question, actually. I don't think that each individual transaction is, I don't think, so what you're referring to is this consensus rule that when a Bitcoin block gets mined, the outputs there cannot be spent for 100 blocks. I don't actually think there is an end lock time that says 100 blocks on there. I could be wrong. I'll double check for you later. But that is just kind of universal. That's just for every single Coinbase transaction, which is the very first transaction in every block. Can't be spent for 100 blocks. If I was designing the software and we all knew that was part of consensus, I wouldn't waste, part of a the bytes that it takes that. You wouldn't waste that if it's going to be the same. So I highly doubt it. But yeah, I'll double check for you later. So that's different. That can be used on top of the 100 most likely. But yeah, good question. Now let's break down the input. What we'll find inside the input is the transaction ID, again, of that previously confirmed output. That's one little piece that we'll find. the other important piece is the index or the order, right? So if all we have is a transaction ID, a transaction can actually have many different outputs. So we need to tell it, okay, which one are we referring to? The first one, the second one, the third one, the 100th one. So we got to know the ID and the index. And those two pieces of information tell us, okay, this is the output I'm trying to spend. The other two little pieces that we'll find here are the length of the unlocking script. And by length, the length is like just almost like the number of characters. We're talking computer code, so it's technically the number of bytes. But it's just like, how big is this thing that we're going to need to read to see if it contains the proof, right, to spend the coins. So that's how big is the script, and then the actual content of the script. Another little note there is that these scripts, they're written using Bitcoin script, the opcodes. If you've heard of the word opcodes, that's a whole, Bitcoin language, programming language that, I won't obviously have time to cover, but that's where these scripts are, that's where you'll find these scripts, the opcodes in this part of the transaction. So that's the header, that's the input, and then the output, that's where you actually specify the amount of Bitcoin to lock. And then similarly, we have how big is this locking script, the conditions that we are imposing on this new output. What I was referring to before with the time locks, here's where you can put more time locks. So I can say, okay, I have 3 outputs, each have their own locking scripts. One of them has to be spent 100 blocks from now, 200 blocks from now. One of them can be spent immediately, and another one can be spent by anyone. Like you can designate whatever conditions you want in each individual locking script. So yeah, I think most people said they know what a UTXO was, but just to cover it, it's good to think of these things. So the unspent transaction outputs, they're a piece of Bitcoin. There's a fixed amount, like we saw. The amount is specified on the output, and has not been spent in a new transaction input yet. So you can think of it as like how paper cash notes have fixed amounts on them. You can have different denominations, right? So you can have 5 UTXOs, 5 outputs with 1 BTC inside of each of them. You have a total of 5 Bitcoin. You can have 1 UTXO with an amount of 5, or you can have 100 UTXOs with 0.05 each, 5 Bitcoin. Any which way you slice it, you still have the same amount of Bitcoin. It's just broken up into a different number of UTXOs. So yeah, this maps onto what we were just looking at with the number of outputs and the amounts. So just to cover a few examples here, 1 input, 1 output. You'll see this. So these are real transactions on the actual blockchain. Mempool.space is a great block explorer. If you're not already familiar, you can analyze the entire blockchain from there. And just found a few of these examples to look at. These nice visuals that mempool.space has. Here we'll see just simple 1 input, 1 output. And so you'll notice, if I have these fixed denominations, like what if I'm trying to pay for something that isn't exactly that amount? Like this is actually very uncommon, this 1 input, 1 output type of transaction, because this is very likely, I don't know, a self-transfer or something, or like, what are the chances someone was paying for something of the exact amount that they had, an output for. So but again, for visual sake, we have 1 input, 1 output. And then the fee I was mentioning earlier is totally implied. So you don't actually say in the transaction, I want to pay this much in my fee. What you just say is, okay, well, how much are you spending out of the output? And what the miners do when they mine the block is they take the rest, like they take all the inputs, the amounts designated in all the inputs, and how much is remaining in all the outputs, and then whatever's left they send to their own address. So that fee there is what you'll see, that little sliver coming out of there. So that's where the transaction fee actually goes, right? It's not actually coded in anywhere. Another example here, this is much more common. 1 input, 2 outputs. And so what you'll actually have in a lot of cases is your wallet. It's got all the UTXOs that it's managing. It's hiding from you, so you don't have to deal with the complexity of picking which UTXO to spend, right? Unless you want to, is if I'm trying to send 0.01 Bitcoin over here on output number 1, but I have a 0.025 input, then what I'm going to do is I'm going to create a new output sending back to myself so I can use that later. So this is likely the change address. So output number 1 is going to, the vendor. I'm buying, a new iPhone or whatever, and then I'm sending the rest back to myself to use later. and I still have access to, the keys to that second output so that I can use it. Another example here, you can have many inputs in a transaction, all in the same transaction. So here's an example of 2 inputs, 2 outputs. Again, nothing too crazy going on here. I'm just trying to show that, in a single transaction, you can have any number of inputs and outputs, granted that it fits into the block, right? There's still block size restrictions. So here's another cool example. You can have 60 inputs and 1 output. This is what you'll hear if you've heard the term UTXO consolidation. Let's say you've been, you buy a little bit of Bitcoin every week and you have all these little tiny outputs just, stacking up in your wallet. Each one of these outputs actually takes up a little more space than if they were all put together into one. So to save on fees, when you actually want to spend that 1 Bitcoin or half Bitcoin or whatever it is, so that you don't have 60 of these inputs split, it's going to be more efficient if you consolidate it all into 1 output. So yeah, that's UTXO consolidation visualized. I'm coming up on time, so there's lots of slides that I just shoved in there in case we had time, but they're much more advanced anyway. This was just supposed to be the basics. The one thing I wanted to show is, obviously, if you put 2 and 2 together with inputs and outputs and inputs and outputs, you can trace any Bitcoin all the way up to its root, right, which is the Coinbase transaction. Every Bitcoin came from a mined block. And so the Coinbase transaction is the only one that doesn't have the input being a previously confirmed output, because it's the freshly minted coin. What you'll also see here in the Coinbase transaction, which is what the miner decides to, construct, sometimes they'll just create these little outputs here that don't actually have any Bitcoin in them, but they're allowed technically. And so miners will usually put, okay, this was mined by, Foundry or Ant Pool or whatever the name of the mining pool is. They'll put that in the opportune just to put their stamp of their brand on the transaction there. And again, don't have time to get into it, but these opportunes, these outputs with almost no Bitcoin in them, that's where this whole inscriptions, data storage on the blockchain, that whole rabbit hole has to do with these, op returns, outputs. Again, we don't have a lot of time to go over them, but if you go and check out the Block Explorer and you see these things, that's the explanation there. So yeah, lots. I'm just going to skip through a bunch of slides here and open it up to questions. So this is the much more technical representation of the actual bytes. Segwit. I might have a minute or two here. Actually, I can kind of explain what happened with Segwit. But first, I guess I'll just open it up for questions, and here's a few links. There's actually a really cool, at the bottom here, bitscript.app is a friend of mine's building this project, and that has a lot of educational resources if you want to really dive into transactions, opcodes. Like, he's got tons of visuals. He's a great designer, actually. So definitely check that out if you're interested in kind of like learning a lot more than this. But yeah, I guess I'll open it up for questions. I think I'm just about at time. All good?
Can you touch on the second thing real quick?
Yeah, so Segwit, the key thing about Segwit, so here, okay, so kind of what I was mentioning with the header in this more technical visual, the input script, so basically the unlocking script, the thing that says, hey, I am allowed to spend this Bitcoin that I am referring to, that used to be directly in the transaction itself. And so that would take up a certain amount of space, and we'd have to, store that in the blockchain forever. But what Segwit did was said, okay, hey, instead of putting it in the transaction, we're going to move it out here into what's called the witness data. And so what this allowed us to do is make the transaction, like the key parts of the transaction, smaller, and we designate the space for later to just kind of trim off at the end, because the reasoning is, after I have proven that I can spend this Bitcoin and I've created new outputs that have new conditions, what do I need this proof for? It's been ingrained in the blockchain. Everybody's agreed on it. It's been confirmed by miners. Why do I need all these bytes that prove that I spent the coins when we're moving on? Like, we've already have these new coins with new conditions. We're basically drawing a line here, and like we're just carrying around this dead weight with us. That again is convenient for validating every transaction from the beginning, because that proof is still important. We kind of want to know that that was accepted and validated, but at least it's in this kind of separate part of the transaction where we can just kind of trim it off or prune it off, if you've heard of pruned nodes, and that's basically called the witness. So again, there's a lot more to cover in there, but that's briefly that's what Segwit introduced as kind of an efficiency gain there for transactions. So yeah, that's all the time I had. Feel free to find me after, and we can chat a little bit more if you have any other curiosities about Bitcoin transactions. So yeah, appreciate it, guys.